Let's ask the man who was probably part of these discussions. The former head of ONGC, Sharma, joins in to talk about the changes that have been talked about since yesterday. Mr. Sharma, morning. It seems that the upstream burden amount may be relooked at. 30,000 crores is being talked about. That would be much higher than what ONGC had been working with?
Yes, for the fiscal 11, you know that Q4 results the companies have yet to publish, and my understanding is this: the downstream company, they are under a lot of stress, and whatever the original that estimates were there, and whatever the government support was to come, the cash subsidy, that has been less than the expectations of these companies, and apparently these companies are they have to finalize their annual results. What I hear, they are under a lot of pressure, and there are some discussions going on whether the upstream companies, they can be made to bear some higher burden. So that's what I have only been hearing. To my understanding, till date we are discussing, there is no decision per se on that. But if that happens, that will definitely, it will not be well received in the market, and for the companies and for the shareholders, it will be a very disturbing news.
Morning, Mr. Sharma. But what about this whole issue of petrol? Because when we keep talking about the FY11 under recovery, the number is still frozen at 78,000 crores when we know that there were significant losses on account of petrol in the months of February, March, and they continue. Should petrol not be included in the under recovery burden in these calculations?
See, to put you that petrol per se, the overall, if you look at the workout, the under recoveries, on account of petrol in absolute terms is not very high. Predominantly it's the diesel and the LPG, kerosene, they account for diesel and LPG. Predominantly they account for major part of the under recoveries. Though for petrol, the companies have not been able to pass on the burden to the consumers, despite that decision to that effect even at the cabinet level. But that amount in absolute terms is not very substantial, so I don't think that will be a very material in order to deciding on this total amount of under recoveries and sharing thereof.
What do you expect to see in terms of product prices now, Mr. Sharma? I mean, we've had a 5 rupee petrol price hike, but there is still a big gap. Do you expect realistically another petrol price hike or even a diesel price hike soon?
Well, obviously, these are three OMCs. Basically, the three oil marketing companies, IOC, HPC, BPC, they are owned by the government, so majority shareholding is by the government. So if the government, not directly, indirectly, they are definitely in a position to tell these companies to increase or not to increase the product prices, and that precisely has been happening. So it's the influence, the government decision influence is very much there, and that's why that even for this the petrol, despite the crude prices going very steeply high, last 2 to 3 months there had not been any increase because there were state elections were there, and everybody, it was known that any increase that will happen will come only after the state elections, and thereafter also, even though the under recoveries for the petrol were over 7 rupees a litre, so the increase has been done on the rupees 5. So they are still under recoveries for the companies, even for petrol also.
There is a sense of foreboding though amongst investors in this space, Mr. Sharma, that ad hoc nature in terms of subsidy sharing ratios and mechanisms actually remains despite the changes that were talked about. Do you share that fear?
Well, it's I feel it's a very, very chronic the issue for the government also to take decision, and it has seen this ad hocism has been going on ever since last 7-8 years. When this subsidy sharing the issue started, the government has not been able to take a decision on formulating that long-term or a mechanism on that account, despite the fact that the government constituted 3 different committees at different level of time, and the last one, the Skiritpari committee, did come out with a total formulation also that how this under recovery, the sharing should be done, but somehow the government could not take a decision on that also, and as a result this ad hocism is continuing. And looking to the current state of affairs, looking to the volatility in the crude prices, and looking to the fact that in an emerging economy like India it's not possible to expose the consumer to all these volatilities, so I am afraid this kind of ad hocism is going to continue.
You were talking about petrol earlier though. What's the likelihood that there is some kind of increase detailed on diesel, on the cooking fuels?
Yes, it is in fact it is imminent. It has to come. Only thing is the elections results are just out, and to my understanding there's a group of ministers already constituted on this, and they are meeting next week, I understand, or could be sometime this week itself, to take a view on that. And I do expect and should be there this increase in price of this diesel, this LPG, could be something in kerosene also. I feel it's very much on the cards.
So where does all this leave the ONGC FPO, which is round the corner, Mr. Sharma? But do you think there will be enough appetite to lap up ONGC in the midst of all this uncertainty?
Well, ONGC per se, because I have been on the board of this company for 9 years, and almost half of that as a CEO of the company, I have seen over the years, all my 22.5 years tenure in ONGC, the company fundamentally is very, very strong. Look at the resource base, it's enviable. Resource base in terms of the acreage we have, in terms of the discovered fields, in terms of the experienced manpower, in terms of the infrastructure for this oil field services, it is unique. So the companies, as we say, the risk factors for the companies much less. We have seen in the worst of the downturn situation, ONGC continue to perform well because of these, that in-house resource base what they have. So I feel this company will continue to deliver, but for this FPO, I feel in case there's this subsidy sharing mechanism, if there's an extra burden more than 1/3 that gets passed on, I feel there's going to be major value destroyer, and I'm afraid in that situation the government will not be able to realize a representative value for this ONGC share. And that I'm sure that must be agitating the mind of the policymakers, and they should give a serious thought to that, any decision on this mechanism of this under subsidy sharing for the under recoveries is going to have a huge impact on the pricing for this FPO.
Thanks, Mr. Sharma. I appreciate your thoughts on